investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you're just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market-wise, let's take a look at it out here. We have the Dow Industrials down 704, NASDAQ off 419, S&P's off 112, gold contract up $33, trading $19.99.80. You get silver flat, $25.79. Light sweet crude up $3.21, trading $118.89. That's hit 122 this morning. Notes and bonds. You get the 10-year right now trading down 16.6, 128.01. The 30-year up one tick at 159.11. And King Dollar. King Dollar's up 606 ticks, trading out at 95.256. Euro's at 108. The yen is out here trading at 115, and the British pound is at 131 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, folks, bottom line, you get the SPY down $10.5, $11. There's no bids out here. That's what this comes down to. And I suspect as we come into this, close out here, bottom line, you get a lot of sellers. They want lower price. And what we have had is you've had those intraday bounces that looks like they could go somewhere. But bottom line is that when you get a downtrend going like this, it's pretty intense. The Qs are down 1060. And, if we close here, that's going to be a closing low from these highs. Because the last time that we get down to this level, we get down to the 318, but yet you closed out at 340. I don't see that happening today. Let's get over to our man, Mr. Dave Mazda. Dave is the head of product managing director at Direction.com. And there couldn't be a better time, folks, to turn around and take a look at Direction. Because the bottom line is that, many times we know a lot of the Tigers and Tigresses, they love trading the doubles and the triples. But I'll tell you, folks, okay, just to basically go a delta neutral, and what that means is that we're going to talk about it with Dave. Dave Mazda, how you doing today?
Doing well. Happy to be back.
Yes, and thank you for coming back. Because there's no doubt we get a market like this. We haven't had a market like this in a long time. And, the Tigers and Tigresses, they love trading, the doubles and the triples and the nugget. There's no doubt. And they're doing very good. And thank you for having so many different ETFs. What I'd love to talk about today, Dave, is just the one-to-ones, okay? And what we're going to talk about, folks, is the one-to-one. And the reason is that I know, everyone has a portfolio out here, okay? So with the doubles and the triples, as Dave and I have explained many times, okay, they're for daily trading. The one-to-one, however, is that you could take your portfolio, let's say there's $100,000 in it, and if you want to hedge it, you could use one of the Direction ETF one-to-one to leverage that. Now, it doesn't mean that the market's not going to go high. I'm just saying I want to set it up so that we can explain to them, Dave, what they can do if they own a lot of tech, if they own, the S&Ps, okay? So looking at this market, can you just explain a little like the one-to-ones, broadly, how we can do this?
Yeah, it's a great point. I think oftentimes we're talking about the 2 times or 3 times bull or bear funds, which are really about amplifying exposures, again, on the upside or on the downside.
Yes.
When you're mentioning the one-to-ones, a great, and we have seen a large increase in interest in our fund, SPDN, which provides the inverse exposure of the S&P 500 on a daily basis. And so this particular product, again, it's not trying to do double the return on the downside. It's just the minus return. So if market's up 1, this fund on a daily basis will be down 1, and so on. And so in this environment, more so than ever, traders have tools to hedge their portfolio, to make their portfolios more resilient. But these can be a great tool. So investors don't necessarily, and traders don't have to sell something they like over the long run. To your point, everyone has a portfolio and likely a lot of S&P 500 exposure in some way, shape, or form. So SPDN can be a tool that a trader could use to hedge that without potentially losing more than they put in, for example, if the market somehow finds its footing here and recovers.
Right. And so what we're explaining, folks, is this, okay? So granted, I know you all love to trade the doubles and the triples, and I'm not discouraging that. What I'm just trying to do here is that, if you wake up in the morning and want to do the SPSXS, great, that's 3 times. But we want to make sure that you close that position out at the end of the day, because if we get a choppy market, the doubles and triples, okay, the bottom line, they're daily investment vehicles. Versus what Dave has just brought up, which is this SPDN, is that if the market keeps going south, you can protect yourself a bit, which is going to be, it's wild, Dave, is that, there's many folks that haven't seen a market like this, and, the bids are hard to find out here. That's the bottom line.
Yeah, no, it's pretty clear. We were already already were expecting an increase in volatility, and we got that, right? So we saw our first correction in some time. We did that again. And then now we're talking about something that's really serious. It's an invasion, and it's a war at this point. And the ability to predict with foresight what may happen, especially with the different actors that we're talking about today, is really challenging. Again, traders who had not necessarily been prepared for this or had taken an outright bearish view can use something like SPDN. They still need to look at it on a daily basis.
For sure.
But it doesn't have the real issues with compounding that can happen in volatile market environments with tools that are 2 times or especially 3 times levered. So really any product that we talk about for directions, leverage, and inverse suite, you do need to have that ability, hey, is today a buy day, a sell day, or a hold day? But the challenges that you can have with being offside with just a 1-to-1 inverse is not nearly as great as being offside on the 2 times or 3 times.
And particularly because they're going to be covering their own portfolio, which is really cool, man.
That's correct.
And of course, folks, okay, I know you're in the gold market, and so that's a different ball game. And that is still trending with us, man. So the bottom line is that check it out, folks. You can go right to our website at TFNN. You can see the direction banner. Bring it up. Do a little homework because it's well worth it. Dave, you have a great one, safe one. We look forward to having you 2 weeks from today.
Thank you. Talk soon.
Thank you. Stay right there, folks. We'll come right back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TESS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TESS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TESS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down a 718. Nasdaq's up 431. S&Ps are off 116. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve has an outstanding show every trading day right here, 1 to 2 Eastern Standard Time. Also a great newsletter, Mastering Probability. Now, the way you get Mastering Probability, very easy. Go over to our website at TFNN. You're going to hit newsletters. You're going to see it on the right-hand side. You just hit subscribe. You can get Steve's newsletter for 1 month for $149. You get it for 6 months for $695, which is a savings of $199 or 22%. And you can get it for a year for $1195, which is a savings of $593 or 33%. Now, they all come, folks, with a 30-day money-back guarantee. So you come, you get the newsletter. It works for you, great. For some reason it doesn't. Guess what? 30 days later, you're going to get your money back. Great time to have a newsletter. Steve Rhodes, what's going on?
Well, just enjoying life here in Florida like so many. This is such a great time of the year, although it did get a little bit warm, I think, up in your neck of the woods this weekend.
It did. It broke records. We were at 90 degrees yesterday.
Wow.
But I'll take it. We're in the pool all day with Tommy and Tommy. Yeah.
Perfect. You know, I spent yesterday, one of my daughters lives in Washington, D.C. She was down in Miami for a wedding this weekend. And so she had a little time yesterday afternoon. So I drove down, grabbed her, and then we went out for lunch. And we went to lunch and kind of like in an old neck of the woods. I think it used to be down in the South Florida area. We were at a shopping center in Bal Harbor, and they've got this nice Japanese restaurant. I've been going to it for years.
Yep.
And they moved from the ground floor, this restaurant moved from the ground floor to the 3rd floor in the shopping center, which is about the worst possible space you could be at typically, and larger in size. We got there, Tom, at 2 o'clock yesterday afternoon. The wait for a table, this is a Sunday,
right?
2 o'clock in the afternoon, 2 hours.
Wow.
And I think they were wrong. I think it was more than that. Luckily, we found a seat at just a regular bar. But it is amazing the number of people that are, whether it's from Palm Beach down there that are here in Florida. I don't know if it's like that in your neck.
No, it is. It is. It's amazing. And that mall is beautiful anyway.
It is.
That is so beautiful. It almost feels like you're in Knightsbridge if you're ever there. Everything's white, folks, okay? I know that mall so well, man. It's really funny. Yeah. Because it's almost like not a mall. I mean, it's so pretty, right? Yeah.
It really is. It's a nice feel, nice vibe. But every restaurant there had lines at 2 o'clock in the afternoon on a Sunday, and it was a beautiful day. So most people would be on the beach, was just a block away. Basically.
I know.
So
crazy.
But hey, you mentioned something. I wasn't going to do this. I had lost my presentation that I typically put together for you, so I'm just going to kind of wing it.
Cool.
But part of that winging it, though, you had mentioned you were talking about the Asian contagion.
Right.
So this first chart that we've got on my screen, hopefully it's up. It's got white background.
Yep, I see it.
And it's broken into 2 parts. Okay, perfect. So. Now, this was mentioned to me by one of the guys that were in the den as a result of a conversation that Larry Pesavento had with one of the guests that he typically has, which was taking a look at a correlation, an analog pattern between the Nikkei 225 from back in. So the chart that we're actually looking at here, this is the high of the Nikkei back in 1980. I think it was January 5th, 1980 when it made its high. And all I've done is I've then shifted that entirely forward to tie into the actual top, which I believe was November 22nd inside the NDX 100. So the interesting thing about these two charts out here, they both made the exact same type of a top, which I refer to as a Rhodes Momentum Indicator top. It's great for identifying tops and bottoms. And as you know, I teach subscribers that. So anybody that subscribes to the newsletter, there's a workshop that'll teach them this entire pattern out here. But I've lined these up so that and look at so they start at the exact same time. So the top again is the 1980 top in the Nikkei, and the NDX is the top currently that we've got in place here that took place last year. But take a look at this correlation. I mean, they look so similar.
It looks like the same chart. I mean, I can see that. Yeah.
It is not. It is not even close to the same chart out here. Now, if I have this built so that each day it automatically adds what the next movement inside the Nikkei would be, and then the NDX is picking up live. The Nikkei is picking up the historical information. But if people wanted to see if this analog, and I'm not saying that it will continue, you and I know that analogs eventually break apart, but right now it looks pretty similar. So here's what the actual analog would look like. And so if you talk about the Asian contagion, this is really showing us that we should have this choppy market like we do. Maybe we had a bit higher, but you were talking about another leg down. Now, you're only talking about a couple weeks. Obviously, this takes it out much longer than that. But it is an analog that certainly is active, and it is really lining up. So you mentioned the Asian contagion. I figured I just had to show that to you.
Yeah, nice. And, it's trading like it, man. That's the bottom line. It's trade. And what I mean by that, folks, is that you get the bounces, but they're they're 30 minutes, and then the sells come in, and, it's 100 points a day, S&P points, that is. And that is, there's folks at the end of this week that won't be looking at their portfolio. That's the bottom line.
Right. So if we shift over to this set of charts here, then, so we just go from that to really take a look at the market here at this panel here. We're taking a look at the Dow and then the Dow Equity Future Contract below. We're really looking at more of a bigger picture because I take a look at the yearly chart, which you and I last year, as we were coming into the end of the year, I was showing you all of the TD9 count tops that were present on an annual basis.
Right.
And it was like, wow, this is a message that we should expect or anticipate at least some type of retracement.
And they were the tops.
Yeah.
Right. I mean, that's the bottom line. Those are the tops, right?
We didn't know fundamentally what might be driving it, right? And usually the technicals do seem to be out there first before some fundamental thing floats out there. So, but here's what we know. Whether it was the fundamental aspect of what's going on right now, overseas or not, what we can take a look at is if you look at the upper right-hand corner and where it says Dow Jones Industrials Weekly, there's actually an A to B. As you know, there's an A to B equals CD to the downside. The 1-to-1 level would take us to 13,021. The 1-to-1.272 would take us to 39.87. This little red horizontal line here at 33,741, that's a breakout level that's developed based upon the TD9 count pattern against something else that I teach to subscribers out here. And once you break below that, which we closed below this last week, obviously we're trading below it today, you typically seek out the next breakout area. and that's down at 30,014. Well, 30,014 gets pretty close to that 30,987 level, and that could be where the Dow is headed to over the course of the next couple of weeks. And I would love for it to get down to that area. It would be scaring the heck out of everyone, hey, including myself, but if we can see some type of bottoming signal or pattern there, that would really be a beautiful thing. Now, we are in bar number 8 right now, so there is no bottoming signal here. But if we can take out the lows of February out here, then and we can do that in the next couple of weeks, that would get us, so we put in either this week or the next 2 weeks after, that would give us this TD9 count pattern. And if we can get a weekly TD9 count pattern right at around the breakout level of 30,014, people are certainly want to pay attention to that. But you're absolutely right. People need to be paying attention to their portfolios now. There's not a whole lot of great information other than the fact that we haven't taken out that swing point from, I think it was February 24th or February 28th out there. And, you know, on the index ETFs, I see things pulling back a little bit light volume. But it looks to me like we are headed lower. Whether it's that full Asian contagion or not, time will tell. But it does look like we're headed lower.
And folks, it's very easy to get Steve's newsletter. Come over to our website at TFNN. And under the newsletters, you see the maximum probability on the right-hand side. Just hit that button. Steve, have a great one, safe one. We look forward to the show tomorrow.
Thanks, Tom.
Thank you. Stay right there, folks. Come right back.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials down 681. You get the Nasdaq off 403. S&Ps are off 111. And let's go to, I'm getting used to this. Sorry, one second, folks. There we go. I get Dave in Chicago. Hey, Dave, what's going on, brother?
How you doing, Tom?
I'm doing great, man. Yourself?
Oh, good. We're just, having a little snow today. Nothing like where you're at.
I heard, it's so great. I was listening to Fast Market this morning, and I guess it was like 70 degrees yesterday and snow today, right?
Well, it was 70 on Saturday and sunny. It was a beautiful day. Everybody was out walking their dog and loving it. But we just knew that there was going to be something else. And then today,
wow, that's
big snowfall.
Welcome to Chicago or Boston. I know.
Right. Yeah. Volatility, like the market, right?
Yes, big time.
So I was asking about. I had a two-part question, as I usually do, to try to pick your brain. But the first part was OIH, where to get off the train potentially. I talked to you a while ago when it was, cratering, went down to like 170s area, and I've stuck with it. And now, of course, where it's at today. It's kind of hitting some high numbers. So I just I'm kind of getting to a point. It's like when is the time to get out of this?
Well, congratulations, man, because you took that heat, and man, oh man, you gotta. So let's take a look at it. The OIH, folks, the bottom line, we take a look at it, it's up $22 today. This is a, big ABC structure up. Let me bring it closer 1 second. This is I think it's three something it's going after. So put this on a weekly first. So you get another ABC up. That's what's going on here. So if we do it this way, you got 252 and 172. So you got what? 30, you got 80. Yeah, 309 is your A to B equals C to D. So
okay.
I'd hang there, man. I mean, what you're going to want to do here for sure, though, is to sell into it. It's possible that this will do. So that's a 1-to-1 ABC structure, Dave. All right, it's real possible. Mm-hmm. You could take your 80 and then multiply it by 1.382 and see what you come out with. Do you know what I mean?
Okay.
Because this is, so yeah. Let me just show you something. So if we look at the OIH, folks, okay. Inside of the OIH allocation holding-wise, what you're going to see, you got Schlumberger, Halliburton, Baker Hughes, Patterson, Hembrook, Transocean. That's what I wanted to show you. The Transocean, these deep water drillers. So what you have here, you can see Transocean went to the moon today, right? Percentage-wise, what we did in 2 days, folks, you just went from 373 to 544. Now the reason is that when you have oil hitting 122, the bottom line is that these oil companies will basically start, drilling and using those rigs, man. That's, so, like Transocean has a long way to run, man.
Wow.
It just blew out its swing to this morning at 5:30. Your next stop up here more than likely is 7:30. to 845, and if they get a couple contracts, which I expect they will, they're going to get so much money for those rigs that's unbelievable. So don't get greedy, but hang around. I mean, you already took the heat. Do you know what I'm saying?
Yeah, no, I appreciate your input. I was going to ask you. I said I was going to ask you one other question. Yeah. I was listening to your show on Thursday or Friday, and you were talking about, I think. Was it platinum you said had a long way to run? Or
yes,
was it
platinum.
I think it was kind of like the comparison between that and palladium, or do I have it mixed up?
No, you have it right. Platinum, if you're going to get in the metals market, I would buy platinum. Platinum went to 1162 today, gave it up. It's only 1118. But in this type of an environment, when you take a look at platinum can go back to its all-time high, which is, I think it's 2,400. Because I had a huge amount of platinum, and I sold into it the last time this went up, and I sold into it from 1,900 to 22. Let me just see this. Where did it go to? It went to 2308. So I think your next leg on platinum can get you to 1382. There'll be some flack at 1382, but all these metals are going up, man. And platinum, because what will end up happening is that because palladium is what had happened, folks, is this. Palladium was low at like $200, okay, when platinum was at 1,000. So what ended up happening is that the car companies switched from platinum to palladium. Well, what happened, you can see palladium hit 2,800 today. I mean, no, palladium hit 3,400 today, and it's trading 29. So I suspect what we'll end up seeing in the future is the car companies are going to turn around again. They're going to change to platinum. You know, it's a changeover that does take a good 6 or 7 months inside of the car lines. Do you know what I'm saying? In order to do that. But, you know, it's all about how much of each one of these, you know, basically worth. And the difference is, well, to me, when I look at it, the difference is palladium, you know, you don't use palladium for jewelry. It's soft. People use platinum for jewelry also, never mind just the industrial thing. So I think platinum is still laying there in pretty good shape, actually.
Okay. All right, man.
Okay,
well,
man.
Thanks.
Have a great
care.
one. Have a safe one. Excuse me. 877-927-6648. So let's go take a look at some of the higher volume. Well, and volume's going to come in this market again, by the way, today, folks, okay? We take a look at this. We're at 978 inside the NYSE, so that's going to end up doing 1.4, 1.5 billion. The composite's already at 5 billion. That's going to do 6 billion to 6.5 billion. This composite, let me bring the NDX up because this, you know, we've talked about this before. It's almost like, I mean, can it really go that low? And, you know, until you've seen how the NDX trades on pullbacks, folks, okay, it is an absolute mind blower. And see, our problem in this market right now is that from the March pandemic low, it went straight up, man. And if you've been in this market for a while, you know something that goes straight up, goes straight down, which was going to be pretty intense, man. And if that's where this shakes out, man, it's intense. And if I show you this, now watch this. If we look at the Dow Industrials, and, you know, the Dow didn't go up as much, but the Dow is coming back to where I think that this whole market's coming back to. So the high of the pandemic, or prior to the pandemic, is 29,562. Well, we're only 3,000 points over that. So to me, that can come down there in a second. Now, if you do the NDX, this is scary, man. 1 second, NDX, there we go. Because the same spot that I'm talking about, we put this up, you're going to see the type of destruction. My God, it's insane. It's 9,700. Same deal. Is that right? Yeah, that's right. It's 9,700. But guess what? That's, you know, if you've learned anything, you got to remember something, that Amazon went down 95% in the 2000 downdraft. 95%. Okay? You could have got Amazon at $2, $2.17, I think. Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien. Welcome back, folks. Dow is down 717. You get the NASDAQ off 426. S&Ps are off 116. So let's go look at Amazon for a couple of the targets out here. Bottom line is that, we know Amazon makes money. There's no doubt about that. Amazon's trading down $154 right now. Has volume on the move down. Let's go take a look at this. Okay, so we broke the consolidation. This is heavy, man. Okay, Amazon is not a buy right now. This is heavy, man. See, so Amazon, oh man, you don't even want to hear this. Okay, 28. If I take it the most conservative, that's 35. So that's still 2,100. Where's 2,100? Yeah. So check it out, man. This is, the way this is set up, folks, okay, is that Amazon wants to go to 2,100. That's pretty intense. The high out here was 3,700. And if that's the case, if that's where we go, that means this whole market is going where I suggested just before the break. Because I'm taking, let me show you what I'm doing here, right? So when you break a consolidation, folks, okay, let me put this up. And I did not take the highs. What I did is that, so when you're doing technical analysis in general, right, what's supposed to be, when you're doing trend lines, you're supposed to be able to hit 3 different spots in order to basically have a decent trend line, okay? So I did not take the highs of Amazon, okay? I took where I could basically hit 3 or 4 lines, and that high was 35.52 versus the high of 37.73. So when you do that, you take the top of that. The top of that consolidation is 35.52. The bottom of it is 28.80. Okay. So we're talking $700, right? You take $700 off the 28.81 and you're at 2,100. And 2,100 just happens to be right where we started in February. So if you're looking to buy equities, folks, God bless you. You can look to buy them, but I would not be buying them right now. Because if Amazon's already broken. And if Amazon goes down to that level, can you imagine what other equities, where they're going to go that don't make money? Because Amazon's still one of the strongest companies out there. So, and this is where it comes into being when I was talking with Dave Mazda about whatever portfolio you have. This is where that you could buy a 1-to-1. And do not buy a 2-to-1 or a 3-to-1, because what happens is, so let me explain what the difference is. What the difference is, folks, when you buy a double or a triple, if in fact we just went straight down, right? Yes, you do great, okay? Because what happens with a double or a triple, as they either go straight up or straight down without a break, they actually get more than a double or a triple. That's how it kind of goes. Not much, but you actually get a little bit more. The problem with a double or triple, if you're trying to hedge something, is that the double or triple, if we go down and we get a bounce again, bounce, and we go back and forth like this, the bull position and the bear position loses money. It's just mathematically, that's how it works, because they reset themselves every day. But that shouldn't stop you from just turning around. And the way you do that, just in case you don't know how to do it, what ends up happening is that you got to figure out how much is in your portfolio. Let's say 100,000 in your portfolio. Well, you got to figure out on the other side is that, what do I have to do? What do I have to buy in order to protect that value? And then that's called delta neutral. And what it would mean is that, let's say if the market keeps going south, well, you'd want the short position to go north, and you basically would be not making money, but you wouldn't be losing as much money. That's how that works. So that would be the ultimate of how it's supposed to work. Now let's picture the other side of it. The other side of it would be that you put this on, and all of a sudden the market goes to the moon. Well, then you got to take it off, and then you're going to lose money on that trade. Okay, but you got to make that choice as to deciding, is it worth to have insurance and or not? And that's anyway, you get the gist of it. Pretty intense. Let's see. Okay, so the question, if market's going down, will the oil producers in the sector roll down last? No, what happens is this. We're in a commodity bull, and everything's going to be more expensive coming out of the ground, okay? So coming out of the ground, and this is what's going to end us put the whole world into recession. That's my take on it, because guess what? You start getting these prices, and we're going to get these prices. We're all going to pay for it. It's all inside of, stuff we buy. That just squeezes everyone, and then the perception changes. What we're going to see here is that as of Sunday night, meaning last night, the perception hadn't changed that this market still wants to go higher and you buy the dip. There were more buyers last week, so check this out, folks, but these weren't institutional buyers. More retail buyers bought last week inside long funds on the dip, that going all the way back to like 2000 or something. There's a story on Bloomberg. It's a big number, okay? Bottom line is that what you have out here, my take on it is that money's going to be lost, and we'll see if more money's going to be lost. Because when this comes to the end, meaning that we're ready to turn, no matter where you go, instead of markets, so here's how it goes. When markets are going up, at the beginning, no one says anything. Then all of a sudden, at the high, every person you meet is a trader, right? When markets are going down, at the beginning, people will be buying. Then in the middle of it, they start getting nervous, right? And then they don't say anything. And then close to the end of it, that's when people are freaking out, folks, and talking to each other like, should I get out? Should I get out? And that's how it works. I can tell you that's how it works in the context, because I remember so clearly. So listen to this. I remember so clearly. I don't remember 2000. Yeah, no, I do remember 2007, 2008. I remember 1998 in a huge way, though, because what ended up happening, we were getting out of work. We were going to have a beer. And this was just a continual for like 6 weeks in a row, down, down, down. And I met this guy that I know. He was a CPA, smart guy, And the bottom line, he looked at me. He says, I'm selling everything. I don't care. This is it. And I said to, I think it was Mark that was beside me. I says, I think this is it. I said, this is the bottom. And I remember saying to him, don't sell, man. I said, I think this is the bottom. I says, because what had happened, I had known this guy well enough, conservative guy, worked for his bread. Everything was kind of in place there, and he was a numbers person. And I said, no, I think this is it, man, because if he's folding, And the good news, he didn't fold, because I saw him 2 weeks after that again. But that's the type of feeling, and that's the type of conversations that are going to take place no matter where you are in this country. That's going to be the conversation, So get your ears up and start listening, because it will help tremendously. Dow Industrial's down 757, Nasdaq's off 448, S&P's off $120, gold's up $34, silver's flat, oil's up $4. Stay right there, folks. Come right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We take a look at a couple of these banks, and listen, here we go, man. Bank of America is down 260, right? Bottom line, next swing point is at 36. Well, guess what? They started at 35.47 pre-pandemic. This market, folks, take a look at these charts. This market, that's where this market wants to go. You get Bank of America almost there right now. Let's go take a look at Wells Fargo. And these banks, every time this happens, folks, okay, they claim they have nothing on their books. You're going to find something on their books. That's the bottom line, And my take in general, let's see, WFC, that's what I'm doing. Okay. We take a look at Wells Fargo. This is breaking down to, we put this on a weekly. Oh, this never made it. So this just barely made it over the 54. This is a mess anyway. But yes, that to me, well, let's go JP Morgan quick, because to me, that is the best bank out there, meaning strongest bank out there. Yeah. This equity just went from, was that 169 to 129. We put this, yeah, this is the same deal. So pre-pandemic, it was at 138. It's $10 below that now, folks. This is a problem. Yeah. Look at this. This is an ABC down. On the weekly, this broke last week. So we got, let's see, 160. I'm going to call it 170, 140. So you get $30. That's going to get you, it's at 130. It's an ABC down to 130. But guess what? There's a gap that's open here at 105. Man, there is some destruction out here, folks, okay? So whatever you can do to protect yourself, do it. Because this is not pretty, and I don't expect it's going to open up pretty tomorrow either. Because when you look overseas, we'll do this quick. When you look overseas, you can see Europe was down 0.4%. That was a FTSE. DAX was off 1.9%. Asia was off 3% last night. Asia will be another 3%. We're going south, man. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 o'clock in the morning. Great show. Look at him, folks.